Welcome back to Secure Pension UK. If you're a pensioner or approaching retirement here in the UK, I want you to stay with me for the next few minutes because what I'm about to explain could genuinely change your financial situation this winter. Imagine opening your bank statement and seeing an extra $100 arriving every single week. Not once, not occasionally, but week after week. Over a year, that's more than $5,000 in additional income. Now imagine that, on top of this, a one-off lump sum of $5,500 lands in your account just days before Christmas, right when heating bills are highest, food costs spike, and family expenses pile up. It sounds almost too good to be true, but for thousands of UK pensioners, this is becoming a reality following a major overhaul of pension rules. Today's video is all about clarity. There has been a lot of noise, confusion, and misunderstanding around these changes, and my goal is to cut through all of that. By the end of this video, you'll understand exactly what has changed, who qualifies, how the weekly increase works, how the lump sum is paid, and most importantly, what you need to do to make sure you don't miss out. Missing even one step could mean leaving thousands of pounds unclaimed, and that's the last thing any pensioner should be doing during a cost of living crisis. The state pension has always been the backbone of retirement income in the UK, but over the past few years, the pressure on pensioners has grown significantly. Energy bills have surged, grocery prices have climbed, rent and council tax have increased, and inflation has steadily eaten away at fixed incomes. Many pensioners have found themselves cutting back on essentials, worrying about winter heating, or dipping into savings just to get by. The government has acknowledged this reality and responded with one of the most significant pension adjustments in recent years. This overhaul isn't a token gesture. For many people, it represents a meaningful, life-changing improvement in day-to-day finances. But like most things related to pensions and benefits, the details matter. Not everyone will receive the same amount, and not everyone will qualify automatically. Understanding how the system works is essential if you want to maximize what you're entitled to. So, let's break it down clearly and calmly. There are two main elements to this pension boost. First, a weekly increase of up to $100 in pension-related income. Second, a one-off lump sum payment of $5,500 expected to be paid shortly before Christmas. These changes are primarily aimed at state pension recipients and those receiving pension credit, particularly people on lower or moderate incomes who have been hit hardest by rising living costs. The weekly increase is designed to provide ongoing support, helping with regular expenses like food, utilities, and transport. The lump sum, on the other hand, is intended to provide immediate relief during the most expensive time of the year, when heating costs are high and household budgets are under the greatest strain. Together, these payments form a powerful combination that could significantly improve financial stability for many households. Now, one of the biggest questions I hear is who actually qualifies for this? The answer depends on your circumstances, but let's go through the main groups. If you're already receiving the state pension, whether full or partial, you may be eligible for the weekly increase, provided you meet the usual residency and national insurance contribution requirements. If you receive pension credit, either the guarantee credit or savings credit, you could benefit even more, as the increase may stack on top of what you already receive. Recent retirees who have just reached state pension age may also see these increased payments applied, assuming their claims are up to date and processed correctly. However, and this is crucial, eligibility is not just about age. Administrative issues can stop payments in their tracks. Outdated bank details, changes of address that haven't been reported, missing paperwork, or unclaimed pension credit can all prevent you from receiving money you're entitled to. This is why checking your details is so important. Let's talk about the weekly increase in more detail, because this is where a lot of confusion arises. The increase is described as up to $100 per week, and that wording matters. Not everyone will receive the full $100. The exact amount depends on your current pension income. If you already receive the full state pension, you're more likely to receive the maximum increase. If you receive a partial state pension, the increase will usually be proportionally lower. For those on pension credit, the increase can combine with existing entitlements, leading to a noticeable rise in total weekly income. To put this into perspective, imagine your current state pension is $180 per week. If you qualify for the full boost, your weekly income could rise to around $280. Over a year, that's more than $5,000 extra. That kind of increase can mean the difference between constant financial stress and a much more comfortable, manageable retirement. Now, let's look at the 5,500 lump sum, because this payment has understandably captured a lot of attention. This is a one-time payment designed to help pensioners cope with seasonal expenses. Think winter heating bills, higher food costs, and the additional pressures that come with the festive period. The timing is deliberate. The payment is expected to arrive shortly before Christmas, giving pensioners flexibility when they need it most. For those who qualify, the lump sum amount is fixed at $5,500. It doesn't vary based on income in the same way the weekly increase does, but eligibility still depends on having your pension claims in order. If you've claimed your state pension correctly, updated your personal details, and meet the qualifying criteria, the payment should arrive automatically. However, delays in paperwork or unresolved claims could affect the timing, which is why action now is so important. Even though many payments will be made automatically, I strongly recommend taking a few simple steps to protect yourself. First, check your state pension status. Log into your government account or review your latest state pension statement. Confirm how much you currently receive and make sure your personal and banking details are accurate. Second, review your pension credit eligibility. Pension credit is one of the most underclaimed benefits in the UK, and many pensioners wrongly assume they don't qualify. The thresholds can be more generous than people expect, so it's always worth checking using the official government calculator. If you discover that you're eligible for pension credit but haven't claimed it, apply as soon as possible. Make sure all supporting documents are submitted correctly, including proof of income, savings, and residency. The sooner your claim is processed, the more likely you are to receive the full benefits of this pension boost. Keep an eye on payment schedules by checking your bank statements and correspondence from the Department for Work and Pensions. If something doesn't look right, follow up promptly. If you feel unsure or overwhelmed, don't be afraid to seek help. Independent pension advisors and official helplines can provide guidance at no cost. Be cautious of third-party services that charge fees for help with benefit claims, as these are usually unnecessary. Let me give you a couple of real-world examples to show how this could play out. Jane is 68 and receives a full state pension of $185 per week. With the new increase, her weekly income rises to $285. Over the course of a year, that's an additional $5,200. On top of this, she receives the $5,500 lump sum, which she uses to cover winter heating bills, groceries, and a small emergency fund. For Jane, this change removes a huge amount of financial stress. Then there's Mark, who is 72 and receives a partial state pension of $120 per week. His weekly increase is $65, bringing his total to $185 per week. He also qualifies for the lump sum, which he uses to cover unexpected medical expenses and household repairs. While his increase isn't the full $100, it still makes a meaningful difference to his quality of life. There are also some common mistakes you should avoid. Failing to update your contact or banking details can delay or even prevent payments. Ignoring pension credit is another major issue, as many people miss out simply because they assume they won't qualify. And finally, never assume eligibility without checking official guidance. Rules can change, and individual circumstances matter. I also want to quickly address a few common questions. In most cases, you do not need to apply separately for the weekly increase if you already received the state pension. However, pension credit may require a separate application if you're not already claiming it. Recent retirees can receive both the weekly boost and the lump sum, provided they meet the criteria and have claimed their pension on time. For those living outside the UK, eligibility can be more complex and depends on specific international agreements, so it's essential to check directly with the DWP. In terms of tax, state pension income and pension credit are generally not taxed, but other income sources should still be considered when assessing your overall tax position. To bring everything together, the UK government has introduced a major pension overhaul that could significantly improve the finances of thousands of pensioners. A weekly increase of up to $100 and a $5,500 lump sum paid before Christmas represent one of the most substantial pension updates in recent years. Whether you receive the full amount or a partial increase, this is an opportunity you don't want to miss. The key takeaway is simple. Check your eligibility, update your details, and claim everything you're entitled to. These steps could make this winter far more comfortable and give you greater financial security moving forward. Here at Secure Pension UK, our mission is to help you stay informed, confident, and in control of your retirement income. If you found this video helpful, please consider subscribing to Secure Pension UK and sharing it with someone who might benefit. Staying informed is one of the most powerful tools you have in retirement. Thank you for watching, take care, and I'll see you in the next video.